This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Historic day. The Dow hits 20,000 for the first time in its 120-year history. Now the hard part, figuring out where stocks go from here.
If you build it, the president signs an executive order calling for a wall on the U.S.-Mexican border, and a handful of companies could come out winners.
Best of the best, what some top-rated fund managers are doing with their money right now in this market. Those stories and more tonight on Nightly Business Report for Wednesday, January 25th. Good evening, everyone. I'm Sue Herrera.
And I'm Bill Griffith in tonight for Tyler Matheson, and I'm coming to you this evening from the place where history was made today, namely at the New York Stock Exchange. Yes, the Dow Jones Industrial Average finally did it. Arguably the most well-known market index in the world. It topped 20,000 for the first time ever today. The NASDAQ and the S&P 500 closed at new records as well. And despite the S&P really being the broader, more representative look at the market and the economy, retail investors still tend to focus on the Dow, an index made up of some iconic American brands out there. Let's get right to the closing numbers for this day. The blue chip average rallied by 155 points to close at 20,068 when all was said and done. The NASDAQ added 55. That's a new record. The S&P up by 18, also a new record high. Dominic Chu has been tracking the action from the floor of the big board for us all day. He joins us now. So what got us to this historic high here, Dom?
So it's been a long time coming, months, we've been sitting there talking about it for such a long time. Today, it was really about one stock in particular that really propelled us in the pre-markets that got us to open right at that 20,000 mark and above it, and that was Boeing on the heels of strong earnings. Boeing alone accounted for nearly 50 points of the Dow's advance today, so a huge chunk of what happened in the action today. On the other side of the equation, you've got United Technologies, which is one of the bigger drags on the heels of its earnings report. So it only took about 4 or 5 points off the overall picture. But still, if you look at Caterpillar, IBM, and namely Boeing, those three stocks added the most to the advance today.
So, Dom, if an investor happened to put $10,000 at or near the market lows, what would have happened?
You know, timing the market is always a tough thing. But if you do look at the way you systematically invest, if you had kind of bought along the way and you managed to buy at the lows, you got a good return in your investment. And here's what we're talking about.
If you invested $10,000 in the Dow at its lowest point during the financial crisis back in 2009, just 2 years later, your money almost doubled to over $19,500. 5 months later, during the Euro crisis, your investment takes a hit. It's now worth a little over $16,200. But with the Dow rising and crossing 17,000, your investments are up again, now over 150% and worth almost $26,000. Over the next couple of years, the stock market remains stuck in a trading range, with the Dow trying at various times to break out higher. But concerns about global markets and the effect of possibly higher interest rates caused two bigger pullbacks in the summer of 2015 and the early part of 2016. With markets hovering near record highs, it would take a major catalyst to jumpstart things, and that's just what happened in the wake of the presidential election victory by Donald Trump in November of 2016. So, your initial investment has now tripled in value at Dow 20,000, coming in at over $30,000.
Woulda, shoulda, coulda. Dom, stay right there. Let's bring in the rest of our panel, a bull and a bear, so to speak, for their thoughts on where the market may go from here. Jim Paulson is Chief Investment Strategist at Wells Capital Management. He's the bull. Sam Stovall is Chief Investment Strategist at CFRA Research. Now, Sam, let me start with you. You're not an outright bear, but you are cautious on this market right now. What are some of your concerns?
That's right there, Bill. I think basically what Dom said is if you are an investor for the very long term, you want to focus on or worry about recessions, and I don't see one on the horizon. However, I do think that I have to advise people that, look, these declines of 5 to 10% or more tend to happen more frequently than they might think. Whenever we have had a 1,000-point move in the Dow, traditionally we end up falling into a 5% decline a little more than 2 months after the fact. Yet, this is the third time that we have gone 2,000 levels without seeing a resetting of the dials. The last two times were 1999 and 2007. Also, we typically find that I would say almost 9 times out of 10, the S&P does trade in a negative year-to-date territory at any point in the year, and about 70% of the time it happens in the first quarter of the year. Valuations or PE ratios, if this bull market ended today, it would be the second most expensive since World War II.
All right, Sam makes some good points, Jim. However, you think that the underpinnings to this market are still pretty firm, and that the move that we just described basically happened well before the election. Perhaps the election was a further catalyst, but you saw this happening during the summer.
Yeah, I think, Sue, that a lot of the underpinnings of this latest rally were started last summer. We had a big growth acceleration here in the United States. We were growing below 2% for the previous year prior to the third quarter. Then we jumped up to 3.5% here in the United States and growing probably 3% in the fourth quarter as well. So we had a pickup in the U.S. growth. I think this recovery, Sue, has finally reached the middle class in the United States. As we reach full employment, wages are finally climbing. Real median income has finally started to come up as well. So broader participation in this recovery. Globally, the positive global economic index has been just reached a 6.5-year high. That says that there's more economies finally participating in this recovery across the globe than almost any other time in the recovery. The earnings cycle, we just restarted it, refreshed it. It's reaccelerating again, where our concerns about global deflation have been arrested as inflation showing signs of moving higher. Interest rates are moving away from zero. The Federal Reserve is normalizing monetary policy. A lot of good things in addition to the Trump presidency that I think underpin this. For the first time, I would argue, confidence is starting to emerge in this recovery about the future, and I think that might generate one last big leg in this stock market yet.
Dom, sentiment on Wall Street itself is rather interesting. The fear indicator that was most widely followed, the volatility index, the VIX as it's affectionately known, is at a 2.5-year low, and some people wonder if that's just complacency. People are expecting the market go higher here.
Art Cashin, who's a senior trader on the floor of the exchange here, has said a number of different times over the course of the past few days and weeks that the low level of stock market volatility is an indicator of that kind of thing, and that should be a caution sign for certain investors out there. I will say this, though, hearing what Sam had to say and what Jim had to say, there are a number of themes that investors are watching. The traders I spoke down here today to have said that they're looking particularly at the financial sectors. JP Morgan and Goldman Sachs are both Dow components, and they're both some of the best performing stocks since the election. If those bank-related stocks or financials can do well, that could bode well for the future, but it's one of those barometers that some traders are watching.
You know, Sam, there are a number of people that we've interviewed here on NBR who say one of their worries is that this market may be priced to perfection in terms of what the expectations are for the new administration. And if, for example, they get bogged down in reforming health care and don't get the regulatory side of things done, that the market might take a hit. Are you worried about the Washington agenda and the success of that agenda?
Yes, I'm a bit concerned about that. I think certainly we have very optimistic rhetoric coming out of the White House, but what if it falls on deaf ears in Congress? They realize that 77%, where we have a 77% debt to GDP ratio right now, and it's only getting worse. And through a lot of the programs of they have to reduce expenditures for every dollar that's been added. So I think that Congress is a bit more conservative, and as a result, might end up pushing back.
Jim, the sectors that have benefited to this point, energy, with talk of reopening the Keystone Pipeline and the Dakota Access Pipeline. Banks, industrial companies, as they want to bring jobs here to the United States. Are those the sectors you want to invest in? They've already seen big rallies here, or do you look elsewhere to find value right now?
I still like those, Bill. I think that you want to stay, if you're in the United States, leaning more towards those economically sensitive sectors. I think you do until the long-term interest rates go up significantly more. 10-year tonight is around 2.5%. I really think that some work we've done suggests it might have to get up around 3.25 or higher before it really starts to bite into the stock market run here. And in the meantime, I think it's going to continue to be led by the more economically sensitive areas. Right now, I would be a little shy towards materials, but I certainly would go to energy stocks, financials. look at small cap and mid cap more than large. And don't forget, I would be overweight in international stocks, which, by the way, are beating the U.S. market this year.
All right, very good. Jim Paulson of Wells Capital Management, Sam Stovall of CFRA Research, and our own Dominic Chu. Thank you, gentlemen, very much.
The Dow first crossed 10,000 in March of 1999, but the financial crisis, as we mentioned, wiped out those gains. The index last breached that level in 2009, and since then, two well-known Dow components outperformed their peers. Home Depot is one of them. And here's Diana Olick.
Home improvement giant Home Depot, a Dow component and leader in this rally, has been on an absolute tear since 2009, not just despite, but likely because of the epic crash in the housing market. Take a look. It's up over 400% since the Dow crossed 10,000. So what fueled the gains? Well, just think about what happened during the foreclosure crisis. First, millions of homes were either taken back by the banks or abandoned by owners who could no longer pay. They fell into disrepair quickly, entire neighborhoods, in fact. Then, very quickly, investors moved in, buying the homes and doing mostly repairs and rehabs, not major renovations, but the kind of fixes that Home Depot products fuel. That was the first surge. But then negative equity, which hit millions of owner-occupants, kept those homeowners in place. They couldn't move without taking a loss. When you don't move, you renovate, you fix, you upgrade. Again, Home Depot's sweet spot. Even now, as homeowners stay in place longer, but millennials start to buy, demand for remodeling products is still strong. As millions of homeowners regain equity amid fast rising house prices, they're using that extra cash to upgrade appliances, fixtures, and systems. For Nightly Business Report, I'm Diana Olick in Washington.
Another top Dow performer since the index last crossed 10,000 is Disney. Julia Borston takes us into the Mouse House.
Since Dow 10,000, Dow component Disney is up 280%, and that's despite falling from all-time highs in October 2015 on CEO Bob Iger's comments about weakness at ESPN. Iger has transformed the company with two $4 billion acquisitions, Marvel in 2009 and Star Wars parent Lucasfilm in 2012. Disney's animation studio turned around with record-breaking Frozen, and revenue at Disney's parks has jumped, and the division has launched a massive new park in Shanghai. And Disney is betting on digital, last year buying a stake in streaming company BAMTech. For Nightly Business Report, I'm Julia Borston in Los Angeles.
And still ahead, big winners, why companies that crush stone and mix concrete are watching Washington very closely.
The top-performing Dow stock today was Boeing. As we mentioned earlier, the world's largest aerospace company reported a rise in quarterly profits. That sent shares to an all-time high, closing up more than 4%. Phil LeBeau has more on Boeing's quarter, including its dealings with the president over the cost of Air Force One.
A big day for Boeing as shares moved higher after posting better than expected earnings for the fourth quarter and giving a fairly optimistic outlook for this year. Boeing beat the street on the top and bottom line in the fourth quarter with earnings 12 cents higher than estimates. That's despite a slight dip in commercial deliveries, but the profitability of the 787 Dreamliner is improving, and the company says the transition to the new 737 sets it up for more commercial airplane deliveries this year. The wild card for Boeing CEO Dennis Muilenburg is overseeing a company dealing with the Trump administration. Remember, the president has blasted Boeing for the cost of new Air Force One 747s. That's led to a couple of face-to-face meetings between the president and Boeing CEO, who says he can work with Donald Trump.
President Trump is very much engaged with business. We've had the privilege of having a very open dialogue with him on business issues and all of the actions that are being taken around things like tax reform, regulatory reform, focus on trade policy. Those are all things that are going to allow us to grow economically and ultimately allow us to grow and add manufacturing capacity in the U.S.
A big concern for Boeing as it deals with the Trump administration is the country's trade policy and how that might change. what impact it could potentially have on Boeing's dealings around the world. Especially in China, which is responsible for about 25% of Boeing's backlog of commercial airplanes scheduled to be delivered in the years to come. Phil LeBeau, Nightly Business Report, Chicago.
It was a different day for fellow Dow component United Technologies. That conglomerate reported a decline in profit and flat revenue across its business units. It also detailed some of the durability problems facing one of its turbo engines. All of that sent shares of United Technologies lower by 0.5% today, Sue.
And Bill, in Washington, President Trump took the first steps to deliver on a signature campaign promise. Today, he signed an executive order to begin planning for a wall on the U.S.-Mexico border and said construction would begin within months. Eamon Javers reports tonight from our nation's capital.
Build the wall. It was one of the signature promises of the Trump campaign, a big, beautiful new wall along the southern U.S. border with Mexico. Today, as President Donald Trump set in motion a process he says will do just that, and the White House says it will find a way to make Mexico pay for it all.
We're in the middle of a crisis on our southern border.
In a visit to the headquarters of the Department of Homeland Security in Washington, Trump said agents there will be encouraged to be more aggressive in cracking down on criminal immigrants.
This is a law enforcement agency. But for too long, your officers and agents haven't been allowed to properly do their jobs.
The president also displayed a new emphasis on improving conditions on the Mexican side of the border to reduce the incentive for people to move north for jobs.
We will be working in partnership with our friends in Mexico to improve safety and economic opportunity on both sides of the border. A strong and healthy economy in Mexico is very good for the United States.
Mexican officials have been meeting with Trump aides ahead of next week's visit between the President of the United States and the President of Mexico. You can imagine that border wall and just who is going to pay for it will be a central focus of that session. For Nightly Business Report, I'm Eamon Javers at the White House.
Construction of the president's wall will likely cost billions of dollars, but it could benefit a handful of companies. Morgan Brennan has that part of the story for us tonight.
The border isn't the only thing getting built up. President Trump's executive order to build the wall catapulted industrial stocks to new highs, as the massive project will mean big contracts for construction companies. Catherine Thompson, whose Thompson Research Group analyzes the sector, says suppliers of materials will be among the first to benefit.
The most basic would be aggregate, cement, and concrete companies. And if you look at that perversely, one of the companies that would benefit is actually a Mexican-based company, Cemex, ticker symbol CX. Other major beneficiaries would be Vulcan Materials, Martin Marietta Materials would be the other two big beneficiaries of this.
Thompson also notes Granite Construction, which has projects along the border, and steel makers that produce rebar are well positioned. And not just for a wall, but for broader infrastructure spending as well. Other prospective winners, Caterpillar and Deere, which could supply the equipment necessary for construction. But about a third of the 2,000-mile border's already been cordoned off, thanks in part to the Secure Fence Act of 2006. And many miles just aren't conducive to a structure, thanks to local terrain. That could mean more demand for surveillance technologies, making defense contractors winners as well. Israeli firm Elbit Systems is already developing a virtual border wall in Arizona, and Boeing has developed and operated border surveillance in the past. But much remains to be seen, including the price. Trump has said it could take $8 billion, but some experts put the cost as high as $25 billion. And none of that includes maintenance. For Nightly Business Report, I'm Morgan Brennan.
AT&T hits its earnings target, and that's where we begin tonight's market focus. While the telecom giant's earnings were in line with Wall Street estimates, the company did report a slight drop in revenue. AT&T also added nearly 3 million net wireless accounts in the latest quarter, and its streaming service DirecTV Now showed some growth. AT&T shares initially fell in after-hours trading, but finished the regular session up 3 cents to $41.39. eBay posted earnings and revenue for the quarter that matched analysts' expectations. The e-commerce giant said an increase in active buyers, a one-time tax benefit, and a strong holiday shopping season all helped results. But for the current quarter, the company gave sales guidance that missed forecasts. Shares initially rose after hours, but ended the regular session up just fractionally to $30.23. And factory equipment maker Rockwell Automation said that quarterly profit and sales grew as lower tax rates and stabilizing demand from customers in the energy industry helped its results. Rockwell also raised its guidance for the full year. The shares popped a full 7% to $153.01.
Meanwhile, copper miner Freeport-McMoRan Moran said that new regulations affecting its Indonesia mine may cause the company to cut jobs and reduce output. That's a move that the company says could significantly impact future results. Freeport also posted disappointing profits for the latest quarter, while its revenue came in above forecasts. Shares were down 3% today to $16.50 per share. Restaurant operator Brinker said that higher menu prices and an increase in employee health expenses caused profit and sales to fall below estimates. The parent of Chili's also said that the results caused it to lower earnings and revenue guidance for all of 2017. Brinker shares were down 6% on an otherwise up day to $44.24. And in an effort to focus on its packaged foods business, Bob Evans Farms says it's going to sell its restaurant division to a private equity firm for $500 million. Bob Evans shares soared by nearly 21% today, closing at $57.94.
And coming up, how are some of the country's best fund managers investing in this record market? We'll hear from them next.
It's a historical moment. It gives people hope that things continue to get better and improve and grow, and it's exciting.
I remember when it was a big deal when the Dow hit 1,000. So, it's steadily progress. I don't think it's anything to, shoot to the moon about. It just happens. It's probably going to go down, too.
The aphorism is buy low, sell high. It's high. If you're in, you should stick around. But I don't think this is a good time to put new money in.
On the day that the Dow closed above 20,000, Tyler Matheson interviewed some of the country's top-ranking money managers at Morningstar's Fund Manager of the Year Awards. Timing is everything. Ty asked them how they're investing now.
Sue, what a day it was to be here at Morningstar's annual Mutual Fund Manager of the Year Awards, an auspicious day of milestones. The winner in the domestic stock fund category, David Wallach, is from T. Rowe Price Midcap Value, and I began by asking him if he does anything different or sees the market differently on a milestone day like this.
Doesn't make any difference at all. I keep focused on the same things I always have.
Wallach is known for making contrarian plays, and I asked him where he's finding those plays this year.
At the moment, it's pretty idiosyncratic. You find values in a number of different areas. There aren't a whole lot of them. The market's pretty well picked over, but we're finding things to buy in things like consumer staples and real estate investment trusts, still a couple names in energy and a few other areas.
Next up was David Harrow of Oakmark International, and I asked him, too, what he thinks about milestone days like this.
What's really important to us is the value level of the market, not the price movement of the market. The price movement doesn't tell you much. It's not very instructive. What's instructive is the valuation which the individual components of that market are selling at.
Harrow's fund is heavily right now in Europe and was last year, and so I asked him how he reacted when Brexit hit.
The reaction was markets around the world kind of went nuts. And it didn't matter whether it was a Japanese exporter, which was adversely impacted by the yen, which strengthened, or the European financials outside of the United Kingdom were strongly impacted. I mean, I think that next day could have been our funds, one of its single biggest drops in history. But again, this was an example in our view.
But it's recovered.
Yes, where price moved, but intrinsic value moved nowhere near what price did, provided an opportunity.
All in all, Sue, a very interesting day. I would say there was general optimism about the tone of the market. But remember, these are stock pickers first and not really market forecasters. They look for where the values are and build their portfolios from the bottom up. From Chicago, I'll be back and see you tomorrow.
And we look forward to that, Ty. The road to Dow 20,000 was full of monumental events. Here's a look back at the history of the world's famous index.
The New York Stock Exchange was in a turmoil. The inevitable crash had finally come.
December 7th, 1941, a date which will live in infamy.
I shall resign the presidency effective at noon tomorrow.
The Dow off more than 500 points. October 19th, 1987. Wall Street's Black Monday.
The 158-year-old firm born before the Industrial Revolution, Lehman Brothers will likely file for bankruptcy tonight.
5 years after the bottom, the market erases its losses from the financial crisis.
There it is. We're above 17,000.
We do expect the Dow to crack 20K for the first time in its 120-year history, and it is done.
Yes, the history of the stock market is the history of our country. Before we go, here's another look at what has been an historic day on Wall Street today. The blue chip average rallying by 155 points. Closing at 20,068.51. The NASDAQ added 55. That's a record closing high. And the same thing for the S&P. It gained 18 points to a brand new high, Sue.
And Bill, as you know, we were just speaking about Dow history, and you and I have seen, oh, great. Look at that hair. You and I have seen an awful lot of history. That's how when the Dow first crossed the 10,000 mark in 1999.
It is all about the hair.
It is. On that note, that's Nightly Business Report. I'm Sue Herrera. Thanks for joining us.
I'm Bill Griffith here at the New York Stock Exchange. Have a great evening, everybody. We'll see you tomorrow.